48%. That is MediaTek's share of the global smartphone chip market right now, nearly double Qualcomm's 25%. If you're listening to this on an Android phone, there's almost a coin flip chance it's running a MediaTek chip. And yet, most people outside the semiconductor industry have never heard of them. MediaTek is the most important technology company that nobody talks about, and it's about to get a lot louder.
Welcome back to Asia Tech Macro. I'm Maya, and today we're pulling back the curtain on Taiwan's other semiconductor giant. Everyone knows TSMC, but MediaTek, headquartered in Hsinchu, just a few kilometers away, is quietly building a multi-billion-dollar empire that's expanding far beyond smartphones into AI data centers, autonomous vehicles, and custom chip design for NVIDIA. Their full-year 2025 revenue hit 596 billion new Taiwan dollars, up 12.3% year-over-year. Their mobile phone business alone surpassed $10 billion in annual revenue for the first time, and they're on track for $1 billion in cloud ASIC revenue in 2026, scaling to multiple billions in 2027.
Let me put MediaTek in context for anyone who doesn't follow the chip industry closely. In the smartphone world, there are essentially 4 companies that design the processors that go into phones. Apple designs its own chips exclusively for iPhones. Qualcomm, based in San Diego, has traditionally dominated the high-end Android market with its Snapdragon processors. Samsung designs Exynos chips for some of its own phones. And then there's MediaTek.
And MediaTek came from the bottom.
That's the remarkable part. For years, MediaTek was seen as the budget option. If your phone had a MediaTek chip, it was probably a sub-$200 device sold in India, Southeast Asia, or Africa. Qualcomm was premium. MediaTek was cheap. But starting around 2020, MediaTek began an aggressive push upmarket with its Dimensity brand, and the results have been stunning. In early 2025, MediaTek captured 36% of global smartphone SoC shipments, and by the latest data, they hold 48% versus Qualcomm's 25%. They didn't just close the gap, they blew past Qualcomm.
How did they do it?
3 factors. First, TSMC. MediaTek has a tight relationship with TSMC and has consistently been among the first to adopt TSMC's newest manufacturing nodes. Their Dimensity 9500 flagship chip uses TSMC's third-generation 3nm N3P process. They completed their first 2nm tape-out at TSMC in Q3 2025, which means they'll be among the first companies to launch 2nm chips in 2026. This gives MediaTek a technology edge that consumers are starting to notice.
I was just reading an article from Android Headlines titled, "Consumers are starting to love MediaTek's Dimensity chips." That's a significant shift in brand perception.
It really is. The Dimensity 9500 was adopted by Oppo and Vivo for their flagship phones, which are massive brands in China and Southeast Asia. When your flagship chip is powering premium phones from leading brands, the budget stigma disappears fast.
What about the second and third factors?
Second, price-to-performance ratio. MediaTek has consistently offered chips that deliver 90% of Qualcomm's flagship performance at 60 to 70% of the price. For Chinese and Indian smartphone manufacturers operating on thin margins, that math is irresistible. And third, the AI smartphone wave. MediaTek has been embedding AI processing capabilities across its entire product line, from flagship to mid-range. Their Edge AI approach, running AI models directly on the device rather than in the cloud, resonates with the privacy-conscious Asian market and with manufacturers who want to differentiate on AI features without relying on expensive cloud inference.
So MediaTek went from budget chips to powering flagship phones at nearly half the global market. But you mentioned they're expanding beyond smartphones. That's where the story gets really interesting.
The smartphone story is impressive, but what's happening outside smartphones is where the real transformation lies. MediaTek is executing a strategic pivot across 4 new growth axes that could fundamentally change what kind of company it becomes. And the first one is the most surprising: AI ASIC design.
ASIC, application-specific integrated circuits, so custom chips for specific AI workloads?
Exactly. MediaTek is now designing custom AI chips for hyperscale data center customers. They're on track for $1 billion in cloud ASIC revenue in 2026, and they expect that to grow to several $billion in 2027. To put that in perspective, the entire ASIC market for AI is one of the fastest-growing segments in semiconductors, with companies like Broadcom and Marvell competing for the same customers. MediaTek entering this space with a $1 billion revenue run rate in its first full year is remarkable.
And the NVIDIA connection.
This is the headline that should have gotten more attention. MediaTek co-developed the GB10 chip with NVIDIA for its DGX Spark AI supercomputers. They also announced NVLink Fusion, a partnership that allows MediaTek's custom ASIC designs to integrate with NVIDIA's NVLink interconnect technology. This is not a licensing deal. It's a deep technical collaboration where MediaTek's chip design expertise is being combined with NVIDIA's AI infrastructure standards.
Wait, so MediaTek is designing chips that plug directly into NVIDIA's AI ecosystem?
That's the significance. NVLink is the proprietary high-speed interconnect that NVIDIA uses to connect GPUs in its data center systems. By getting NVLink Fusion access, MediaTek can design custom ASICs that communicate directly with NVIDIA GPUs at full NVLink bandwidth. This is something that only a handful of companies in the world can do. It positions MediaTek as a critical supplier to the AI infrastructure build-out, not just a smartphone chip maker.
That's a massive strategic upgrade. What about the automotive play?
MediaTek reported over $1 billion in automotive design wins, with revenue starting to ramp in 2026. And in December 2025, they announced a joint development agreement with Denso, Japan's largest automotive parts supplier, to build a custom automotive SoC for advanced driver assistance systems and cockpit systems. Denso supplies every major Japanese automaker, Toyota, Honda, Nissan, and increasingly works with German and American manufacturers too.
So MediaTek is going from powering your phone to powering your car's brain.
And the fourth growth axis is co-packaged optics, or CPO, which is the technology for high-speed optical interconnects inside data centers. As AI data centers push for higher bandwidth between racks, CPO is becoming essential. MediaTek is developing CPO solutions with 112G and 224G SerDes technology, which is the cutting-edge standard for data center networking.
So to summarize, MediaTek is simultaneously the world's largest smartphone chip designer, a billion-dollar AI ASIC player, entering automotive with Denso, and building data center interconnect technology. That's an incredibly diversified chip company.
And the diversification is strategic. Smartphone chipset revenue was 59% of MediaTek's total in Q4 2025, down from a much higher proportion a few years ago. The company is deliberately reducing its dependence on the cyclical smartphone market by building recurring revenue streams in data centers, automotive, and AI.
How does the financial picture look?
Full year 2025 revenue was 596 billion new Taiwan dollars, about 19 billion US dollars. Q4 alone was 150.2 billion NT, roughly $4.8 billion. Gross margin guidance for Q1 2026 is 46% plus or minus 1.5 percentage points, which is solid. For context, Qualcomm's gross margin is in a similar range. But the real story is the revenue mix shift. If cloud ASIC hits $1 billion in 2026 and automotive starts ramping, non-smartphone revenue could approach 50% within 2 years.
A 50-50 revenue split between smartphones and everything else. That would make MediaTek a fundamentally different company than the market currently values.
Contrarian Corner. The consensus view on MediaTek is moderately positive. Strong smartphone share gains, interesting diversification story, good TSMC relationship. But most analysts still classify it as primarily a smartphone chip company with some promising side businesses. Alex, what's the angle the market is missing?
The contrarian thesis is this. MediaTek might be the most underappreciated beneficiary of the AI infrastructure build-out because it sits at the exact intersection of two megatrends that are usually analyzed separately, the edge AI revolution and the data center custom silicon revolution.
Explain that intersection.
On the edge side, every phone, laptop, car, and IoT device is getting AI capabilities. MediaTek's Dimensity chips already run AI models on device, and with 48% of the smartphone market, they have the largest installed base of edge AI processors in the world. That's billions of devices running MediaTek's AI engines. On the data center side, their ASIC business and NVIDIA NVLink Fusion partnership position them as a designer of the custom chips that power cloud AI. Most companies are in one camp or the other. NVIDIA and Broadcom dominate the data center. Qualcomm and Apple are focused on edge devices. MediaTek is building in both.
Why does being in both matter?
Because the future of AI is not just cloud or just edge, it's the interaction between them. When you ask your phone's AI assistant a question, some of the processing happens on device, on a MediaTek chip, and some happens in the cloud, potentially on an ASIC that MediaTek also designed. If a single company can optimize both ends of that interaction, the latency, power efficiency, and user experience can be fundamentally better than when two different companies handle the two ends.
That's a compelling vision, but here's my pushback. MediaTek's ASIC business is tiny compared to Broadcom, which generates tens of billions in custom silicon revenue. Can MediaTek really compete at that scale?
Fair question.
Broadcom's custom silicon business for Google, Meta, and others generates roughly $12 billion annually. MediaTek's $1 billion 2026 target is modest in comparison. But there are two advantages MediaTek has that Broadcom doesn't. First, MediaTek has a manufacturing relationship with TSMC that gives them priority access to leading-edge nodes. They already completed a 2-nanometer tape-out, and their ASIC designs can leverage TSMC's most advanced processors. Second, MediaTek brings a systems-level design capability from decades of building smartphone SoCs. A smartphone chip is one of the most complex integrated circuits in the world, combining CPU, GPU, modem, AI accelerator, image signal processor, and power management on a single die. That systems integration expertise translates directly to designing custom AI ASICs.
There's another angle I want to explore, the DRAM shortage we discussed in our last episode. How does that affect MediaTek?
It's a headwind for the smartphone business, no question. Rising DRAM costs mean smartphone manufacturers are either raising prices or downgrading memory specs, and both scenarios reduce unit shipments. MediaTek's own guidance for Q1 2026 showed a potential 6% sequential revenue decline, partly reflecting this dynamic. But here's the contrarian flip. The memory shortage accelerates the shift toward more efficient on-device AI processing, which is exactly MediaTek's strength. If cloud inference becomes more expensive because data centers are competing for scarce memory, there's an even stronger incentive to run AI models locally on MediaTek's edge AI chips. The shortage makes edge AI more valuable.
That's a nice structural argument. Expensive cloud memory pushes workloads to the edge, where MediaTek dominates.
And there's a geopolitical dimension. MediaTek is Taiwanese, like TSMC, but with a crucial difference. TSMC is the target of relentless pressure from the US, China, and Europe to build fabs in their territories. MediaTek, as a fabless design company, faces none of that pressure. They design chips in Hsinchu, manufacture at TSMC, and sell globally. Their Chinese revenue is substantial. They're NVIDIA's partner in the US, and they're working with Denso in Japan. MediaTek operates as a true neutral in the chip war, supplying all sides without the geopolitical baggage that TSMC carries.
Action items. How should investors and business professionals track MediaTek's transformation?
3 specific actions. First, track the cloud ASIC revenue ramp against the $1 billion 2026 target. MediaTek has been guiding towards this number, but the quarterly trajectory matters more than the annual total. If Q1 and Q2 2026 ASIC revenue comes in strong, with identifiable hyperscaler customers beyond the NVIDIA GB100 partnership, it validates the thesis that MediaTek is a serious player in the data center custom silicon market. Watch the quarterly earnings calls, specifically the breakdown between smartphone, ASIC, and other revenues. The company has been deliberately providing more granular revenue segmentation, which itself signals confidence in the diversification story. If ASIC revenue is tracking to $1 billion by mid-year, the stock re-rating from smartphone chip company to AI platform company could be significant. Second, monitor the 2-nanometer chip launch timeline and customer adoption. MediaTek completed its first 2-nanometer tape-out at TSMC in Q3 2025, making it one of the first companies globally to design on TSMC's N2 process. The launch of the first 2-nanometer Dimensity chip, expected in late 2026, will be a landmark event. The key question is which smartphone OEM gets the first 2-nanometer MediaTek chip. If it's a premium brand like Samsung, Xiaomi, or Oppo for their top-tier flagship, it confirms that MediaTek has fully shed its budget image. If it's limited to mid-range devices, the perception gap with Qualcomm's Snapdragon persists. Track announcements at any major mobile industry events and pay attention to which brands are named as launch partners.
And third?
Third, for anyone building hardware products in Asia, evaluate MediaTek's total solution offering as an alternative to Qualcomm. This is actionable for product managers and engineering teams, not just investors. MediaTek now offers competitive chips across smartphones, tablets, smart TVs, Wi-Fi 7 routers, automotive cockpit systems, and AI edge devices. Their engineering support in Asia, particularly in China and Taiwan, is widely regarded as superior to Qualcomm's, and their pricing is consistently 20 to 30% lower at comparable performance tiers. With the Dimensity 9500 proving competitive at the flagship level, the argument for defaulting to Qualcomm for premium products is weakening. If you're designing a product that will ship in Asian markets, MediaTek should be on your shortlist.
The big picture takeaway for me is that MediaTek is Taiwan's stealth tech champion. Everyone focuses on TSMC as the island's irreplaceable asset, but MediaTek, with 48% of the smartphone chip market, a billion-dollar ASIC business, and partnerships with both NVIDIA and Denso, is building a second pillar of Taiwanese semiconductor leadership that operates at a completely different layer of the value chain.
And the timing couldn't be better. The AI infrastructure build-out is creating demand for custom silicon in data centers. The memory shortage is pushing AI workloads to the edge. The automotive industry is going through a digital transformation that needs new chip suppliers. And NVIDIA needs partners who can design custom chips that integrate with its ecosystem. MediaTek was positioned at the intersection of all 4 of these trends. Whether the market recognizes that in 2026 or takes another year to catch up, the underlying business momentum is undeniable.
And if you want the full breakdown of MediaTek's revenue segmentation, the NVIDIA NVLink Fusion partnership details, and the Denso automotive deal, we publish a free daily newsletter at asiatechmacro.substack.com.
In our next episode, we're going to look at how Asian central banks are navigating the dollar strength dilemma. The BOJ is hiking while everyone else is cutting or holding. The yen, won, and rupee are all under pressure for very different reasons. The policy divergence is creating fascinating cross-asset opportunities and risks.
That's going to be a great one. Thanks, everyone.
Stay data-driven. Bye.